Hi everybody, it's Tim Reazor with Revere Asset Management, just before 4 o'clock here on a Wednesday night. So very quickly, stock nerds, market lovers, before we begin, this video is going to be titled, I've decided, has Thursday's down move already started? But before we get into that, and I want to show you something that's happening. It's happened in the futures right before they close. If they run the futures all the way to 4 o'clock Central, then they restart them up at 5 o'clock. But we'll take a gander at that here in a moment. But real quickly, stock nerds, market lovers, podcast this week has been really well received, and I think that the nature of this market and what we're looking at and what we're studying as a firm is really helping a bunch of folks. I'm getting a bunch of positive feedback on the podcast, and I can't say thank you enough for taking the time to listen to it, whether you listen on Apple, iTunes, whether you get a Google Play Store, whether you just watch it from the email that we send you. We send you all of our videos. By the way, if you ever want to see all of our videos, just go right to Daily Market Insight. There are 210 pages of back testing videos available to you to see how we performed in any market, any condition, from COVID to what we're doing right now to 2018 when rates were going to be raised indefinitely, but they never were, all the way back to when oil was the last at over $100 a barrel, which it is right now, of course, back in 2014. You can see all of that right if you go to the Daily Market Insight tab. Want to get a hold of me right here, timrevereasset.com, 855-732-5932. You want to see what the fellows are doing in the portfolios, what goes on the watch list, what gets off the watch list, what gets in the portfolios, what gets sold. Don and Hunter at Revere Asset, America's fiduciary right here. Tell you what, I did a call to action for life insurance people who are in really bad annuities or have questions about, are there any good annuities? Danny actually talked about, are there any good annuities on this week's podcast? And there's been some questions about that. So listen, talk to America's fiduciary Dan Stewart, because we don't sell any of those products, by the way. All we do is talk about strategy, and we have clients that want to have us put our strategies to work for them. So by the way, if you want to do that, 855-732-5932, or just email Dan at revereasset.com. And look, I get a bunch of messages over the transom through Twitter. So at TJ Reazor, if you want to get a hold of me. My direct messages are open. They show up here just like text messages, okay? So if you message me on Twitter, I get back to you real quickly. It's brevity, and it's real easy for me to get back to you that way. It's not really long form per se. So with that, stock news, market lovers, these videos there for what? If your edification purposes only, the never do misconstrued advice when the ways to guys, all you have to do is in fact give us a call. So with that disclaimer, let me show you what took place here into the close. I mean, I'm over here on my left-hand side of the screen. So 4,400. So we're trading between the gates here, between 4,300 and 4,400. Okay, and we come up to 4,400 and we just pull back, and you could say that's just normal, but and I'll show you some levels here in bigger charts. But this is about a 100-point drop off in the NASDAQ, and you're like, well, the market's had such a big move. They did have a big move, a tremendous move today. So we're going to, well, what triggered that move? And so let's get a screen here going. We'll show the VIX futures as we build our sight picture, give you situational awareness for markets tomorrow. So what informs our sight picture, and what really get that rally started going was Powell's testimony, right? And so Powell starts talking, and he says, look, we're not going to do this 0.5%. We're going to probably do this, right? And so Powell telegraphs to the market through congressional testimony this morning that we're going to do 0.5%, and markets go wild, right? Because it's not like another 0.5% would be death and destruction to markets. Inflation is really getting out of control here. I read a study yesterday. The average consumer over the year will spend an extra $5,000 per year, as long as this persists, for how long it persists. And I'm like, well, it can't go on forever. Do you remember? Does anyone, study the 70s into the very early 80s? And so it can go on for some time, folks. And so it adds up. And so what I want to point out to you is something super interesting. So we're going to use the VIX futures, the professionals tool, not the cash VIX, the people's VIX, but the VIX futures. And so VIX futures have not been able to pull back to the mean, right? They get a little extended away from what, the 5 and the 8. Here they just pull back to the 8, and they're already starting to bounce. And so, well, what does that mean to me, Tim? Well, here is let's get this on a daily chart of the VIX here, the VIX futures. And so I'm going to tell you, and I'm going to go out on a limb here and say that if for some reason, and it's a market and anything can happen, so I don't know the reason, but if for some reason you come up here and start flirting with this high, from when is this high? It's last Thursday, a week ago, okay? So you start flirting with this Thursday high, markets are going to probably do one of those. Are they going to sink into hell and damnation? I don't know that. Are they going to take out the lows? I don't know. I don't think so. I mean, they're pretty resilient here, right? So the fact that you don't know, I don't know. But what I do know is that's a pretty bullish chart of the VIX futures. And if the VIX futures start going up, this market is being driven around, dragged around by algorithmic trading. And so those algorithms probably kick in and start selling stocks. And then there's one more piece of information we should look at. The VIX Futures Inversion. It has not, my friends, gone away. So I've covered this ad nauseum very quickly. If you're paying more for a contract with shorter time, that means risk is here. Risk is now over the course of 3 months. And you see that the current contract is $29.95. The April contract is $29.35. And then the May contract is $28.55. That's not normal. In a normal world, this contract would cost less. This contract will cost a little bit more, and this contract would cost the most because there's more time, a value add, if you would. But now, because it's such a risky time for markets, according to, not me, the VIX futures, we're going to charge you more for less. Boy, isn't that the definition of inflation? More for less. And so you have inflation on the VIX futures. You're getting, no, that's actually backwards. You're not getting more for less. I think you know what I'm trying to say here. Either way, so you're paying more per contract for less time, and that is a big deal. And so let's take a look at the indices themselves. So let's go back to our charts here, and let's punch in the S&Ps. Where have we gone? And so we come down to S&Ps here, and we're going to run a little simple fib retracement here from recent, think 214 high to this is 224 low. And we were able to get up to the 618, and we've stalled and we've stalled and we've stalled. Could we get it, which happens to coincide with, by the way, the 21 exponential daily moving average. Could we skirt up here and start moving higher? It's a market, man. I don't know if you figured this out, but S&P futures were up. They were up a little bit more today than this, but they're up over 2% at one point, like 2.25%. We're up 70 points today in the face of a war, in the face of inflation, and all that other stuff. Market's heavily short here. You got to remember that. And so just a little bit of short covering makes the bull market go round. And so here you go. So you stalled here. So we're at 43.73, right here. So yeah, where do we go back? Do we go back to 43.42? Do we try to take out Tuesday's low at 42.75, 100 points lower? It's hard to say. But if I show you a 5-minute chart, you're like, dude, what happened at 43.99? Well, a couple of things happened. Resistance happened, right? Absolutely, resistance happened, and they were selling this after the 1500 mark. So here's your right before the close candle, and then 43.81 to 43.70. You're like, Tim, that's no big deal. Yeah, but the Nasdaq was super interesting. I know Snowflake reported, but Snowflake isn't big time Nasdaq. This is let's see, 1450 was at 42. I've got a device on my screen that you can't see that it was blocking my view there. 42.90. What down to 41.74, and at 40, you stop at 41.96. Yeah, they just kept walking it down. Like normally you'd see more short covering potentially after close. No, they were dumping after close. They held it right to the end, and then they dumped. That's super interesting to me. Let's look at this on the daily chart. So where are we at in time and space? So, I thought I did this. We'll do this live with you. So we'll go, there's 2-3. We'll do the 2-3 high. Or we can do the 210 high. Let's do this high right here. So you pull this here. And so look, you're not even up at the 618. You're kind of stymied here around the zone of the 21, and it's a zone, and the 50% retracement. And so, and now, it's not about catalysts. This market's being led by algorithms and headlines, and those headlines drive the algorithms. And so, yeah, I guess this is, overall, is this a bullish chart? Not really. No, of course not. But let me see if I can find this other chart set. Here's put call. So where are we at put call wise? is this market, here you're still hovering. You got up to just right there around that 0.9 level that you want on the 10-day moving average. You're at 0.86 here on the 10-day. That's not too shabby. But you're down here at 0.78. I mean, this is kind of just neutral territory, not complacent like you are down here, not super everyone buying puts. And so was today enough to get enough people to cover that now it shook them out of their short positions and the market can start to fall again? Potentially. We'll see, right? We just have to see how this market decides it wants to open up and trade. And it's 4:05 right now. So in 55 short minutes, we'll start to get a look into the next day's futures and what happens. And so my title has Thursday's March lower already begun, or whatever I decided to call this video. Might be a moot point. And so we shall see. Let's look at the Dow together. So here is the YMs. So the Dow on the daily, a little recent high, recent low, stymied at the 50% retracement, but it gets the headlines, right? Up 531 points, down 600 points, up 500. Look, and now you close at 33, 798. So you close here, you're just vacillating in broad ranges. And that's what I really want you to understand. Well, Tim, how broad is the range on the Dow? So here, my friends, is a daily chart of the Dow futures. And what, my friends, is the average true range over the last 21 days? It's almost 800 points. So like, Tim, I don't quite understand that. 785 points, almost 800 points trading range. Well, let's give you a little bit of a look-see here. So if 531 points is 1.6%, right? So you're vacillating almost 2% in the YMs over the last 2 days. And oftentimes you don't see that because it might happen overnight while you're sleeping, hence the words overnight, or the word overnight. And so this is violent. And I can tell you that the markets don't like when this ATR line down here is doing this. That is volatility, and you can see the markets come down. The markets like what? They like Lake Placid, man. They want Lake Placid. They want the trading range. They want the ATR to come down, and then you can get these moves. This is still pointing up. And so I'm not 100% sure that this, you might get a couple days of good bullish trading, but I'm not sure the event's over yet. And it's not an opinion. It's just like what I'm seeing on the charts based on past experience. This is kind of why I'm here. And so let's look at the TMX together. So what about interest rates? And the market has not liked higher yields. Market though, the TNX goes up almost, goes up 9%. But can we round up to almost 10%? And the markets don't even blank. And then like what's happening with stocks like Citigroup, finally, like look at this move down, I was like, no, we're going to raise rates. And it's finally that Citigroup gets a move. How about BOA, Bank, BAC, sorry, Bank of America Corp, up 1.62%, Wells Fargo, Wells, WFC, 3.84%. These things have fallen on such hard time. How about XLF? Like 41 down to 38. I mean, you're like, Tim, that's not a big range. Just, I get you. KRE, 70. I mean, these look, the ETFs look a heck of a lot better than the individual bank stocks. How about Goldman Sachs? I'm curious. I haven't looked at Goldman Sachs in a while. Finally, catching a bounce, right? Like that's. So what could that be segment like? Well, if interest rates, if the banks, everyone knows interest rates are going to rise, the banks are still selling off. Well, the spreads have gotten narrower between 2s and 10s, but maybe stagflation, maybe a slowing of the economy. Hard to say. And so, and it's like we'll know more in the next couple of trading days. But what I do know is that the stage is set. If the Vix futures, I think it's a really important chart to take a gander at. If the VIX futures were to pull back to the 21, I mean, that is a massive move lower for this. You're going to see stocks explode higher. And should be prepared for that. But right now, the last 1, 2, 3, 4, 5, 6, 7, 8 trading days, there's 5 trading days in a week, have found its support at the 8 and at the 5. And if you were to go toil up here, you know, take out yesterday's high and start flirting with this up here, it's my thought that you'll see stocks actually start to pull back. Now you'll start finding that where will you find the stops? What could you expect? So let's put the NQ up here, and let's get this on. Say we'll start at 195. So 195-minute chart. Where are the stops at, right? So yeah, probably here's the overnight lows from Sunday. So we were talking all those big time sanctions on Sunday, and the market comes down well, just above that 13.6 level. Yeah, you'll probably trigger a bunch of stops in this area. It's a zone, people. Probably trigger a bunch of stops and get you down to, and where potentially would that lead you to? Yeah, probably down here to this 13.460 level as a first stop. Is that going to happen tomorrow? I doubt it. I mean, just strong day today, right? Pretty strong day today. So how about the S&P? We'll do one more here. We'll look at ES. So we're still on a 195-minute chart. So you start taking out, you know, like start chopping out the lows here. You know, your next stop is, you know, this 42. We'll just call it 4,200. So you're trading 43.73. So you take out 42.50. You know, this level here, 4,200, and you know needs to hold. And if that were to give way, 4,100 retest. We're a long ways from that, but I think it's something that it's important that you watch and see what develops, because the market, and just to show you how volatile this market has been. This is a daily, okay, S&P futures chart, and the range, my friends. I'll get my mouse back up here. There we go. The range, my friends, over the last 21 days, intraday, is 115 points. So when people talk excitedly about this here, we didn't take out the upside range, meaning we go up 115 points, man, or more. I mean, that's a really big deal. We're breaking the outside range. This is still a very volatile market, both to the upside and the downside. And I think you need to go. I think I'm hoping that this. I know you have an appreciation for it. I didn't mean, try not to sound glib, because that's not how I feel. But this could warp down. If this warped down overnight, let me just get this back here. If this warped down overnight 115 points, you wake up and S&Ps are down 115 points. That's still within the normalcy of this market. That's how perverse it's become. The normalcy of this market is $115, 115 points, okay? 115 S&P points. But if I come here we're on a daily chart. So let's just come back to December or November. Now look where my circle is on the left-hand side of your screen. Now, on November 19th, the average true range, we'll just round up, is $40. On Pearl Harbor Day, 12/7 of 2021. The average true range is 77.7, so $78. To start the year on 1/4, the average true range is $57. Now, as we end the second day of March, the average true range here is almost $116. Yeah, volatility the markets need plasticity, like placid, not this, to make. By the way, what's happening here as the ATR is coming down, yeah, the market is of course going up. So with that, my fellow stock nerds, you know I love you. If you have any questions, take umbrage with what I'm talking about, just want to reach out and chat at TJ Reazor is my Twitter, tim@revereasset.com. Hope it helps, and I'll see you at the next update.